What is the best quantum stock for your investment in 2025? This video has taken me quite a long time to get all of the technical analysis done for, but I have now finished this and I am happy to share this data with you guys. In this video, I'm going to be going over 6 of the best quantum AI stocks. I'm going to be showing you their financials, so we're not just going off of their future potential, but we're also going off how safe they are currently for your investment. Quantum stocks have very high potential in the next decade in the stock market, and getting in now could be quite fundamental to your success in beating the markets. I should point out that investing in quantum stocks is a very forward-looking endeavor, and the technology is still in very early stages of development for these companies. But with that being said, let's get straight into this video. So to kickstart this off, we're going to be taking a look at Google. So I have just recently done an analysis on Google on their financial situation, and I did rate them at a buy. But a quick brief rundown for you is their earnings per share are set at 7.55 at a price at $205, and we have a PE ratio of 27 currently. With Alphabet making a notable milestone in quantum computing recently, it announced a breakthrough with its new chip, Willow, capable of performing calculations in the 5 minutes that would take a supercomputer longer than the age of the universe. So they are massively ahead in the game of quantum computing, I think it's fair to say, and this stock does obviously have a very diverse portfolio across many sectors. With Google's future plans being to build a fault-tolerant quantum computer within the next decade, capable of solving real-world problems beyond classical computing capabilities, Google is really trying to bring forward the time frame in which quantum computing is going to be useful within. Keeping this technical analysis as short as possible, as we've got a lot to get through, Google's liquidity ratio is really good, their retention rate is really good, and their free cash flow is also really good. So there is nothing to be worried about as far as Google is concerned on the financial element. However, when we go down to the intrinsic value down here, we can see that the intrinsic value is set at $248 on the left and $142 on the right, with a mean being set at 195 and the current price being set at 204. Google seems to be relatively fairly priced at the moment. However, that doesn't mean to say I don't think it is a buy. I have actually rated Google as a buy. As you can see just here, we have Google rated at a buy. I think it is obviously a really secure investment going into the future. And with them leading the way into quantum computing, I genuinely think, in my opinion, it might be the #1 pick for a quantum stock currently. However, that doesn't mean to say that these next quantum stocks aren't going to be just as good. It's just because Google is diversified and we will see returns within the stock within the next year, at least before quantum really kicks off. I think Google deserves a really strong position in this video. So now we are going to be looking at IONQ. IONQ have an earnings per share currently of minus 0.82, so this company is currently not in profit. So who are IONQ? Well, they specialize in quantum computing and has been a significant growth driver within this sector. With a rise of 140% in November 2024, the company is noted for its focus on quantum computing and is closely monitored by investors interested in growth stocks within the quantum computing sector. So IONQ is one of the leading pure play quantum computing companies, with it having several key advantages that make it a standout in the industry. For example, they have a trapped ion approach, which is very unique to IONQ. This is very different to Google's and IMB's semiconducting qubit approach. This is because ion qubits are more stable and have a lower error rate than semiconducting qubits. So this is where things take a bad turn for IONQ. We are going to look at their financials here, but it is obviously a very key note to say that this company was only founded in 2020, and there is of course a lot of R&D going into this sphere of research at the moment. So there is obviously going to be a lot of negative overcast over their financials. But with that being said, on the liquidity ratio, they're actually doing outstandingly well. You want to see this at 1, so for it to be on the high end of 124 and the low end of 40, their liquidity rate is brilliant. On the retention rate, however, we can see it is a different story, as they are obviously not in profit. In fact, they are currently losing around 457% on the trailing 12 months, which is absolutely ridiculously high, not in a good way. And on the free cash flow, they are consistently down as well, but not as bad as you would expect for the amount of R&D in which this company is going through. Furthermore, trend lines are projecting this stock to only increase over the next couple of weeks to months. But despite this, earnings per share estimates aren't actually projected to get any better in the next couple of months to years. So intrinsically right now, this is not a stock which I can say you should be buying into, because there is clearly no growth and profit for this stock at the moment. But if you are a bit of a gambler and you do want to see a large return in the next decade, then this stock could be the right stock for you, as it will be a leading stock in this sector for the next 10 years. Especially with their unique approach to quantum computing, this stock could definitely lead the path for other stocks yet to follow. So it could be something that you get into now whilst they are still massively in debt and not in profit, and you will reap the returns and reward for that in the next couple of years to decades. So another stock which is currently still not in profit is RGTI. They currently have an earnings per share of minus 0.37. This stock is a prominent player in the quantum computing industry, specializing in the development of semiconducting quantum processors and integrated quantum computing systems. This stock currently has established and robust partnerships across various sectors, enhancing its position in the quantum computing industry, with just some of their partners being Blueforce Quantum Machines, Nvidia, Riverlane, and Novera. It's clear that with these strategic partnerships, especially ones like Nvidia, this stock could have massive growth in the future. But of course, when we look at the free cash flow for this company, it is obviously not very good on the right here, and the retention rate is just as bad and the liquidity rate is no better. But of course, this company has only been founded in 2022, so you can't expect to see these figures be particularly good for this stock at the moment. With them missing the expectations on their earnings per share and the growth rate only being set at 31% despite the earnings per share being so low, I think out of this and the previous stock of IONQ, I would have to put my money on IONQ just because of their unique approach to quantum computing over this stock. So now we are going to look at some more stocks that are actually in profit, which is a good thing for us, as that means we can actually calculate an intrinsic value, and it means that they have a solid grounding in more than one sector currently. So to kickstart this off, we are going to be looking at IBM. So IBM's earnings per share are currently 6.42 at $255, and they have a PE ratio of 39.83, and they pay a dividend yield of 2.92%. IBM is a major player in the quantum computing field with a long history of research and development. Their IBM Quantum division is focused on making quantum computing accessible for businesses, researchers, and development worldwide. So they did actually meet and beat their earnings per share estimates, and they had a surprise rate ranging from 3% all the way to 11%, and in the next year we are expecting to see a 5.31% growth for IBM. However, when we look at the financials for this company, we can see a really bad liquidity ratio. However, this is then saved by their free cash flow being pretty decent on the right here. I say pretty decent, that is really good. And when we look at the retention rate, we can see a retention rate of around the 10% mark, with the exception of this year here, which I believe is 2022. So now we're going to look at the intrinsic value for IBM, and this doesn't look good at all. We can see here with the price being set at $255 and the growth rate being at 5.63 plus the surprise rate, we can get an intrinsic value of $122 with a 25% margin of safety. That gives you an acceptable buy-in price at $91, and that is the left bullish formula, and on the right revised bearish formula, we get an intrinsic value at $78 and a buy price at $58. Going in between these two to get the mean, we see that the mean intrinsic value is currently 100. So we can see that this stock is currently overvalued for no amount of growth. So for that reason, I won't be putting IBM at a buy. I think I will be putting this at a sell currently. But of course, with them taking into quantum computing, I think this stock is still going to be perfectly fine in the long run. I just think for quantum wise, there is probably better stocks. So moving on, we are now going to look at Honeywell. Honeywell are currently priced in at $223 with an earnings per share of 8.66 and a PE ratio of only 25. They also pay a dividend yield of 2.02%. Honeywell's quantum computing division is one of the strongest in the industries. It was formed in 2021 as it was a merger between Honeywell Quantum Solutions and Cambridge Quantum Computing. Unlike Google and IBM, their platform is a trapped ion approach to quantum computing, which offers a higher stability and lower error rates, which is obviously the same process in which IONQ have taken. However, you do get the added bonus that this stock is already in profit, so there is definitely a higher reason, in my opinion, to go for Honeywell over IONQ. If we do look here on the earnings per share, they beat all of the expectations, with the surprise rates being relatively good, and in the next year we are expecting to see a 12.26% growth. So looking at the financials, the liquidity ratio could be better, but it is saved by the free cash flow, and the retention rate being around the 15% mark is really strong. So if we look at the intrinsic value for this stock, what can we currently see? Well, currently we get a mean intrinsic value at $206, with the current price being set at $223 and the high end being set at $261. I think it's fair to say that this stock is currently somewhat fairly valued. I think it's safe to say that if you were to want to buy into a quantum stock, this is possibly one of the best ones to buy into, especially as the stock is already in profit. However, currently they are somewhat fairly valued, so you're not going to see a return on investment potentially in the next 1 to 2 years. You might do, it depends how much speculation is priced into this stock, of course, but the PE ratio is only 25 at the moment, so it's fair to say that whilst it is somewhat overvalued, they aren't actually priced in too much higher than the current earnings. But I would actually hedge my bet on this stock over IONQ. However, IONQ could be a better deal currently with the price being so much lower, but as a safe investment, I believe Honeywell is probably the better option. Microsoft's current quantum approach is centered around the Azure program. A cloud-based quantum computing platform, and its work on the topological qubit is a unique approach aimed at building a scalable and error-resistant quantum computer. So quickly looking at the liquidity ratio, it is relatively decent, being around the 1 mark. Their retention is absolutely outstanding, and their free cash flow also mirrors this, which is of course only to be expected with a stock such as Microsoft. So now if we look at the intrinsic value here, we can see on the left, more bullish formula, we've got an intrinsic value of 426, and on the right 243, with the mean being set at 335, meaning that this stock is somewhat fairly valued at the moment, if not slightly overvalued. But with their approach to quantum computing, I do think in the future this could be a very high regarded leader in this sector. So for that reason, I think I would be putting Microsoft at the top of this list, up there with Google, with them beating estimates on their earnings per share with a pretty decent surprise rate here in the positive, and the next year's growth projected to be set at 14.35% at the current earnings per share. I think it's safe to say that Microsoft is going to be a key player in quantum computing, but at the moment it does seem to be somewhat fairly / overvalued, so it might not be the right time to buy in, unless of course you're looking to hold for the whole duration of this quantum cycle, which can last 10 to 20 years, then you might be buying this at quite a good price currently. So there you have it. I have finally put together the list here for you guys, and we can see that in joint first I have put Amazon and Microsoft. In second place we can see Honeywell. Third place I've put IONQ. Fourth we've put IMB, and in fifth I've put Rigetti. So I hope this video has been somewhat interesting for you guys and has provided some value. If it has, please do leave a like, subscribe and comment. With that being said, I will see you for the next video.